Everyone remembers the bank that nearly broke Britain. We told that story in episode 1, RBS, the biggest bailout in history. But here's what almost nobody remembers. That same year, that same move, Scotland's other great bank died too. It was older than RBS, older than the United Kingdom itself. Founded in 1695, it had survived 313 years of wars, crashes, and empires. And in September 2008, it went from footsie giant to rescue case in about 48 hours. Its collapse was so toxic it nearly killed the bank that saved it. This is the story of HBOS, the forgotten twin of Britain's banking disaster. This is gone bust. Stand in the middle of Edinburgh and look up and you'll see it. A great green domed palace on the hill called the Mound, watching over Princes Street. For 2 centuries, this was the head office of the Bank of Scotland, an institution so old it was created by the Scottish Parliament, before Scotland and England had even joined into one country. 1695, 32 years older than its great Edinburgh rival, the Royal Bank. And for nearly 300 years, those two banks glared at each other across the city and built a reputation the whole world trusted. Scottish banking meant careful banking, prudent, boring, safe. By now, 4 episodes in, you know exactly what happens to Safe. In 2001, the old bank did something radical. It merged with Halifax, England's mortgage machine, a former building society that lent more for houses than anyone in Britain. The new creation was called HBOS. On paper, it was a perfect marriage. 3 centuries of Scottish caution, wedded to the biggest home loan business in the land. But culture is decided by whoever's in charge, and the men in charge didn't come from the cautious side. James Crosby, and after him Andy Hornby, young, brilliant, and steeped not in banking but in retail. Hornby had made his name at a supermarket chain. He became boss of one of Britain's biggest banks at 41, and HBOS began to run less like a 300-year-old bank and more like a shop with a sales target. Branches were given targets like checkout tills, mortgages, loans, credit, pushed like weekly specials. And upstairs, away from the high street, one division was quietly making bets that dwarfed everything else. The corporate lending arm, pouring tens of billions into property developers and entrepreneurs at the very top of the market. The old bank on the Mound had spent 3 centuries learning when to say no. The new one was built to say yes. Inside HBOS there was a man whose entire job was to worry. Paul Moore, head of Group Regulatory Risk, the bank's designated brake pedal, and around 2004 Moore pressed it. He warned in his own account that the bank's sales culture had run dangerously out of balance, that HBOS was growing faster than it could safely manage. He raised it. He documented it. He took it to the top. And what happened to the man whose job was to say no? He was removed from his job, made redundant, dismissed. He would later tell Parliament for doing exactly what he was paid to do. His warnings were buried with a settlement and a confidentiality agreement. The brake pedal had been unbolted from the car. With the warnings gone, the yes machine accelerated. By the peak, the corporate division alone had lent out sums so vast they rivaled small national economies, much of it to commercial property, the most cyclical, most fragile lending on earth, at the top of the biggest credit bubble in living memory. And like Northern Rock, remember the cues from episode 1. HBOS didn't fund all this from its own deposits. It borrowed day to day from the global money markets, which meant Scotland's oldest bank now had a hidden off switch, and the switch was in someone else's hands. September the 15th, 2008. Lehman Brothers collapses in New York, and the world's money markets freeze solid. Every bank that lived on borrowed money was suddenly living on borrowed time, and nobody in Britain had borrowed like HBOS. Within days its shares were in free fall. The money markets wouldn't lend. The off switch had been flicked. Britain's biggest mortgage lender, 22 million customers, was dying in full public view. There was no time for a rescue plan. There was barely time for a phone call. The phone call happened at the very top. With the Prime Minister's personal blessing, a takeover was stitched together at extraordinary speed. Lloyds TSB, solid, dull, careful Lloyds, would swallow HBOS whole. Britain's competition rules, which existed precisely to prevent a bank this dominant, were simply waived. The deal that would normally take a year of lawyers was agreed in about 48 hours. 313 years of history rescued between a Monday and a Thursday, and everyone breathed out. The other Scottish bank had been saved, except the story wasn't over, because nobody at Lloyds truly knew what they had just swallowed. Within months, the poison worked its way out. That corporate lending division, the yes machine, was hiding losses on a scale nobody had admitted, Over £10 billion gone in a single year, one of the worst divisional losses in British corporate history. The rescue turned toxic. Lloyds, the careful bank, the boring bank, the bank that did everything right, was dragged under by what it had swallowed and needed its own taxpayer bailout. £20 billion. The British public ended up owning almost half of it. Think about that. HBOS didn't just die. It nearly took its rescuer with it, the lifeboat, started sinking. And the reckoning, by now you can recite it with me. The head of the corporate division was fined £500,000 and banned from banking. The only HBOS executive ever sanctioned for the collapse. James Crosby, under pressure after Parliament called HBOS an accident waiting to happen, handed back his knighthood, voluntarily to his credit, the only banker of the crisis who did. Paul Moore, the man who said no, was vindicated in front of the world. And in a strange twist, some HBO's bankers DD eventually go to prison, but for a separate loan fraud at a reading branch, not for the collapse itself. For killing a 300-year-old bank. Same answer as always, nobody. Today, the Bank of Scotland name still sits above branch doors owned from London by Lloyds. The name survived, the bank didn't. Next on Gone Bust, the biggest story of the season. The time Scotland bet half its national wealth on a swamp in Panama, and lost so badly it helped end Scotland itself as an independent country. Subscribe, the giants keep falling.